optic stocks. Figure 1.1, which can be found in the accompanying bonus material, illustrates the stock prices of Corning from January 2000 to the end of 2002. I bought the stocks in January 2000 at around $40 a share, split adjusted. In about 9 months, it almost tripled, going all the way up to $110. Then, it started its decline. For a while, I didn't budge, as I still had a sizable gain. Of course, it never went straight down. It fluctuated, and these fluctuations gave me hope. It will come back, I kept telling myself. Then, in 2001, as the bad news about the telecom industry flooded in, the falling accelerated. By mid-2001, I had lost half of my investment in the stock. I continued to ride the roller coaster all the way to the bottom. My Oplink stock fared worse. I bought at the IPO, thinking it would double in 3 months, as Wall Street predicted. It never did. The price of Oplink almost never went above its IPO price. Of course, it too fluctuated and gave me hope. It was painful to look at the balance of my brokerage account, so I stopped checking. Instead, I started reading Peter Lynch's Beating the Street. I gradually realized that those fiber optic stocks were terrible investments for me to make. So in the fourth quarter of 2002, I threw in the towel and sold everything at more than a 90% loss, right when the prices bottomed and they actually became much better investments, as I will explain in Chapter 2. It took some 15 years for the NASDAQ index to return where it had been at its 2000 peak. As of June 2016, and even after so many years, the Dow Jones U.S. Telecommunications Index is just above 50% of its 2000 apex. An industry went from boom to bust. A bubble burst. As I would learn later, this kind of boom-bust cycle has been repeated many times throughout history. The bubbles. In his book, A Short History of Financial Euphoria, economics professor John Kenneth Galbraith discusses all the speculative bubbles since the early 1600s. He argues that financial memory is notoriously short and defines bubbles as created by human speculation when there is something new and there is an abundant amount of money from leverage. Mark Twain said, "History does not repeat itself, but it rhymes." It turns out that the fiber optics bubble was just another rhyme of bubbles that have come before. The first recorded economic bubble was the Dutch tulip mania in the late 1630s. At its peak, any tulip bulb could fetch a price equivalent to many years of earnings of a skilled worker. People were selling land and houses to speculate in the tulip market. Another phenomenal historical bubble involves the stock of the South Sea Company. The company was established in the early 18th century and was granted a monopoly on trade in South Sea in exchange for assuming England's war debt. Investors loved the appeal of the monopoly, and the company's stock price began to rise. Just as with any bubble, high prices drove the price ever higher, and even Sir Isaac Newton wasn't immune to the speculation. In 1720, Newton invested a meager sum in South Sea. A few months later, he had tripled his investment and therefore sold his position. But the stock price continued to rise at an even faster pace. Newton came to regret the sale as he watched his friends quickly become rich. So he went all in at 3 times the price he had sold for. The price did continue to increase for a time, but then it collapsed. Newton sold his position at a great loss at the end of 1720. The entire drama had lasted less than a year, and Newton lost £20,000, which constituted his life savings. Even Newton, one of the smartest people in all of history, couldn't escape the destruction caused by the bubble. He created the entire theory of classical physics with the inspiration of being hit on the head by an apple, but he couldn't overcome the emotions of greed and fear. He later wrote, "I can calculate the movement of stars, but not the madness of men." It was amusing to learn that the founding father of the field of my academic study had lost so much money in a stock bubble, just like me. Not that it made me feel any better. The fiber optics bubble was like all past bubbles in terms of the associated greed for something new and the abundance of money and leverage. As in prior bubbles, speculation